All right, we will be taking your calls in a little bit. And before that, though, we will be talking with Clinton Wilkins about the Bank of Canada holding its benchmark interest rate steady at 2.7% today as policymakers wait for more clarity on how tariffs will impact the economy. Clinton Wilkins, our mortgage guru, welcome to the show as always, my friend.
Thanks for having me, Todd.
All
Certainly
right.
a lot of uncertainty out there right now.
Yeah, uncertainty seems to be the key word right here. And Tiff Macklem talked about uncertainty remaining high around the trade conflict with the United States, and describe why that's such a factor here with us.
Well, it really impacts what's going on here in Canada. You know, as much as we have our own ecosystem and economy here, really what's happening is so tied to what's going on in the U.S. Although their economy is very different from ours, certainly there are many ties, and it does impact what's happening here at home and what's happening, obviously, with these rate decisions here from the Bank of Canada.
Okay, so I guess no change is not a drop, but it's not an increase as well. So how do you think that mortgage holders would welcome this news or not?
I think stability is okay, Todd. I think a lot of people were optimistic that we're going to have a rate cut. The Bank of Canada, the Bank of Montreal, for example, they put out an article and they're believing that I think it's 75 basis points they're going to see rate cuts between now and the end of the year. Now, the Bank of Nova Scotia did come out and said they're not sure they're going to see any more cuts before the end of the year, but they think there's going to be more cuts in 2026. So I think the consensus is we're going to see rates be lower. The question is, when will we see them be lower? And I think that's the real question right now. I'm okay with stability. Mm-hmm. Consumers can plan, they can budget, and they can know what their cost of borrowing is right now. And that being said, Todd, fixed rates, completely different environment right now. We've really seen an uptick in fixed rates. You know, we were very, optimistic, and we were seeing some rates starting with a 3 here even just a few weeks ago, but we certainly have seen some increase in the fixed rates just due to what's going on in the bond market and those cost of funds.
Okay, where are fixed rates generally right now? I know it would vary depending on people's financial situation and the lender, but generally where are they sitting?
Most fixed rates are in the low to mid 4s right now, Todd, depending on which term a consumer we're going to take and if it was a refinance versus a purchase with high ratio insurance from the Canadian Mortgage Housing Corporation, Sagen, or Canada Guarantee. So the rate product certainly is impacting the rate that a consumer is going to get. So the product's very, very important and not a one-size-fits-all right now, Todd. So I think that's really important to understand. I think at renewal, consumers are seeing maybe a rate that maybe is as much as 25 basis points less than a consumer would get on a refinance file, for example.
Okay, so we remember historical lows not all that long ago. I don't anticipate, or do you anticipate that we'll see anything nearly what we saw in the early 2020s here?
Really, it is very uncertain. You know, I think if the economy really does end up crashing, I think we will see rates again, maybe in that 2020 level. I think what we need to remember right now, Todd, is those rates likely went too low. Right. And that's why we had the increases over the last 18 and 24 months that then people had to deal with, obviously, a higher cost of borrowing. We had to bring inflation down. So I don't know if we'll go as low as, we saw in 2020, but I do think we're going to go lower than where they are right now. But I'm kind of okay with where the rates are. Yeah, we'd love to have rates that are in the 3s, but at least we can plan. And I think where the rates are right now is it's not inflationary, but it's also not suppressive either. So right now we're in more of a balanced rate environment. And I think the longer the rates stay stable, I think then people can plan, they can make decisions. And I think anyone who's looking for kind of that longer term borrowing, now is a good time as any to get a rate. You know, if you can get a rate at 4%, sure, it's not 2%, but it's also not 6%. So I think that's the one thing that we need to remember. We're more in that median mark right now.
And hopefully people learn their lessons from when they were historically low, to not get over and to not overspend on your mortgage leverage, right? And we know the stress test is built in there, but a lot of people were caught off guard when rates increased and their mortgage renewed at the end of that, and hopefully people will learn that lesson. Do you have that conversation with your clients?
Certainly. And thank goodness for the stress test, Todd. I know people were cursing it. They weren't maybe affording what they would have afforded, previously. But thank goodness for the stress test, because it protected Canadians from themselves. For us, when we're doing a qualification, we look at what people can afford and what people can get approved at. And sometimes those are very different numbers. And I think that's where you really need to have a look in the mirror before you start looking out the window on really what your financial goals are. And that's why mortgage lending is so complex. And that's why it's so important that consumers need to trust a professional and stick with them. We are not a one and done operation. It's really about building that relationship. And for us, yes, the rate is important, but it's not the be all and end all. And the lowest rate isn't always the best rate, because there's really a wide range right now in terms of products. And I think some consumers are certainly feeling that now, especially when their mortgages are coming up for renewal.
Indeed. So when it comes to rates, I guess some stability is not a bad thing. That's kind of your key message here, right?
That is certainly the key message. It's very busy right now, and I think the amount of volume in terms of mortgage lending, the amount of volume in terms of real estate sales is high, and the rates are not slowing people down. So I think a lot of people were standing on the sidelines, the last 2 years. Rates in the 6% range, that slowed people down. Mm-hmm. But now we're getting into a situation where it's more balanced, and there is some pent-up demand, so people are doing transactions. And I would say right now, based on what I'm hearing and what I'm seeing, it's a great time to do mortgage financing. It's a great time to buy real estate. The demand is still high, but we are getting some more supply coming on hand in Halifax, and we need much more supply. So I really hope that we'll see more here coming very soon.
Okay, Clinton, always great, my friend. Thanks so much, and we'll talk again soon.
Thanks, Todd. Have a great day.
All right, take care. Clinton Wilkins, our mortgage guru.